What's up, Amelia from Revenge Rewired here. Today's story, absolutely wild. Hit subscribe so you never miss one. I met Marcus at a tech startup incubator 11 years ago. I was a software engineer with a specialty in database architecture. He was a sales and marketing guy with an MBA and enough charisma to sell ice to penguins. We clicked immediately, not romantically at first, but as business partners with complementary skills. We spent 6 months developing our product. Enterprise data management software for mid-sized companies. I built the technology, Marcus built the pitch deck. Together, we built DataSync solutions from absolutely nothing. The romance came later, after our first major client signed a $180,000 annual contract. We were working 18-hour days, surviving on coffee and takeout, celebrating every small win. One night, after closing our third client, Marcus kissed me in the office. We were married 8 months later. For the first 5 years, we were genuinely partners in everything. The company was structured as an LLC with 50/50 ownership. I was CTO, handling all technology and product development. Marcus was CEO, handling sales, marketing, and client relations. We made decisions together. We grew the business together. We reinvested profits together. By year 5, DataSync Solutions had 23 employees and annual revenue around $3.2 million. We were profitable, growing, and successful. We paid ourselves modest salaries, $95,000 each, and left most profits in the company for growth. Then Marcus started traveling more. Client meetings, he'd say, conference in Austin, sales trip to Chicago. I was buried in product development, managing our engineering team, dealing with technical challenges. I trusted him to handle the business side. That was my mistake. The marriage started crumbling around year 8. Marcus became distant, critical, distracted. When I suggested counseling, he said he was just stressed about business. Revenue is down, he'd say. We're losing clients to competitors. The market is changing. I believed him because I wanted to believe him, because I was focused on my side of the business, the technology, and assumed he was managing his side competently. Then I found the text messages on his phone. Not just evidence of an affair, but business discussions I knew nothing about, references to clients I'd never heard of, mentions of contracts I'd never seen. When I confronted him, he didn't deny the affair. "I'm not happy, Sarah," he said flatly. "I haven't been for years. I want a divorce. What about the business? We'll split it fairly. I'll buy you out or we'll sell. Whatever's fair." The word fair from Marcus should have been my first warning. 4 months later, we sat in a conference room for mediation. Marcus had hired Richard Townsend, a sharp divorce attorney known for protecting high-net-worth individuals in business divorces. Richard had a reputation: aggressive, strategic, and expensive. I'd hired Amanda Reeves, a competent family law attorney who specialized in business asset division. She was thorough and fair, but not as ruthless as Richard. "Let's start with the business," Richard began, spreading financial statements across the table. DataSync Solutions has had a difficult 3 years. Revenue has declined significantly due to market competition and client attrition. He slid a profit and loss statement toward us. It showed revenue of $1.8 million for the most recent fiscal year, down from $3.2 million 3 years ago. Operating expenses were high. Net profit was only $87,000. "As you can see," Richard continued, "the business is struggling. My client has been working tirelessly to keep it afloat, but market conditions have been challenging." Marcus sat beside his attorney, looking exhausted and frustrated. He'd dressed down for mediation: jeans, a simple button-down shirt, no tie. He looked like a man barely holding his business together. "Given the current state of the company," Richard said, "we've had it valued by an independent business appraiser." He produced a formal business valuation report. I looked at the number, stunned. $200,000. The company we'd built from nothing, that had been worth millions just a few years ago, was now worth barely more than a decent car. Marcus spoke for the first time, his voice heavy with what sounded like genuine regret. "Business has been terrible, Sarah. I've been killing myself trying to save it, but we lost our 3 biggest clients last year. Competition from the big players is crushing us. I'm barely keeping the doors open." He looked at me with what seemed like sincere exhaustion. "I know you put your heart into building the technology. I did too, on the business side. But the market has changed. We're not competitive anymore." Richard pulled out another document: a buyout offer. "My client is proposing the following: He continues operating the business and assumes all liabilities. In exchange, he pays Ms. Chen $100,000 for her 50% ownership stake, given the company's current value and uncertain future. This represents a fair settlement that gives Ms. Chen immediate liquidity without the risk of the business failing entirely. Amanda reviewed the documents carefully. This seems like a significant decline from where the business was 3 years ago. What specifically caused this drop in revenue? Client attrition, Richard said smoothly. The enterprise software market has become dominated by major players: Salesforce, Oracle, SAP. Mid-sized companies like DataSync can't compete. 3 of their largest clients moved to enterprise solutions. Others went with cheaper offshore alternatives. Marcus nodded along. I've been trying to pivot, to find new market segments, but it's been brutal. Honestly, Sarah, I'm exhausted. I'm willing to keep fighting for the business, but I understand if you want to just take the buyout and move on. His lawyer pushed the papers closer to me. Take $100,000 and let's be done, Marcus said with a sigh. I know it's not what we hoped for when we started, but it's better than watching the company fold, and both of us getting nothing. Amanda looked at me questioningly. The offer seemed logical based on the financials presented. A struggling business, declining revenue, uncertain future. Taking $100,000 in cash versus holding on to 50% of a potentially worthless company. But something felt wrong. I'd been so focused on the technology side that I'd lost touch with the business operations. But I knew our product. I knew it was good, competitive, valuable. I knew our client list, or at least, I thought I did. The idea that we'd lost so much business so quickly seemed strange, and Marcus's performance felt rehearsed. The exhausted entrepreneur routine, the defeated sighs, the casual dismissal of the company's value. It was too perfect. I smiled carefully at Richard and Marcus. I appreciate the offer. Let me review everything with Amanda, and we'll get back to you within 2 weeks. Richard looked satisfied. That's reasonable. But I want to be clear, this offer has a time limit. The business continues to decline. If we wait too long, there may not be $100,000 worth of value left to buy out. Understood, I said evenly. As we left the building, Amanda turned to me. Sarah, I have to be honest. Based on these financials, the offer is actually fair. If the business is really in this much trouble, taking the guaranteed money might be the smart move. Give me those 2 weeks, I said. I need to investigate something. What I didn't tell Amanda, what I couldn't tell her yet without proof, was that I'd already started investigating Marcus 3 months ago. It started the week after Marcus asked for the divorce. I was clearing out my desk at the DataSync office. We'd agreed I'd work remotely while we sorted out the divorce to avoid awkwardness. When I noticed something odd in my email. Our company used Google Workspace for email and file storage. As CTO and co-founder, I had administrative access to the entire system, something I'd set up years ago and never thought about since. While backing up my files, I glanced at the company's email storage usage. It was massive, nearly 2 terabytes. That seemed high for a company that Marcus claimed was shrinking and losing clients. Out of curiosity, I ran a search in the admin console for emails from the past year. There were over 45,000 messages. For a supposedly declining business with reduced client interactions, that was a lot of communication. Then, I noticed something else. There were several email addresses in our system I didn't recognize. Addresses like m.davidson@datasync.com, and sales@datasync.com, and contracts@datasync.com. I knew our employees. We didn't have anyone named Davidson. I clicked on the M. Davidson account. The mailbox was active, with hundreds of recent emails. Sales conversations, contract negotiations, client communications, all signed by Marcus Davidson. Business development. Davidson was Marcus's middle name. He was conducting business under a slightly different name, using an email address I'd never seen, with clients I knew nothing about. I spent the next 6 hours going through those emails, my stomach sinking with each discovery. Marcus wasn't just hiding an affair. He was hiding an entire shadow operation of the business. There were contracts with clients I'd never heard of, service agreements for our software at price points I'd never approved, references to DS Consulting LLC and DataSync Services LLC entities I didn't know existed. The company I thought was dying was actually thriving. Marcus had just hidden it from me. I needed professional help. I found Robert Chen through a recommendation from a colleague in the tech industry who'd gone through a contentious business divorce. Robert was a forensic accountant who specialized in business fraud and hidden assets. Our first meeting was at a coffee shop far from my neighborhood, where no one from our business circles would see us. I need complete discretion, I told him, showing him printouts of the emails I'd found. My husband doesn't know I have access to these accounts. Robert, a serious man in his early 40s, with wire-rimmed glasses, reviewed the emails carefully. These reference multiple LLCs and client contracts that aren't in the business financials you were shown in mediation, correct? The company supposedly has revenue of $1.8 million and is valued at $200,000, but these emails suggest there's revenue in clients I know nothing about. This is more common than you'd think in business divorces, Robert said. One spouse hides revenue through shell companies or parallel entities. The legitimate business shows declining revenue, while the spouse siphons money into related entities they control. He looked up at me. Here's what I need: complete access to the company's financial records, bank statements, tax returns, client contracts, and corporate filings. Can you get those? I'm still 50% owner and have administrative access to our systems. Yes. Good. I also need you to hire a business valuation expert, someone independent who can assess what the company is really worth. I can recommend someone, Jennifer Wu. She's a certified business appraiser who's testified in dozens of divorce cases. Between my forensic analysis and her valuation, we should be able to uncover what your husband is hiding. How much will this cost? Robert was direct. My fees will run $20,000 to $30,000 depending on complexity. Jennifer will be another $15,000 to $25,000. You're looking at $35,000 to $55,000 total. But if your husband is hiding millions in business revenue, it's worth the investment. I thought about Marcus's tired performance in mediation, the $100,000 buyout offer, the carefully prepared story about business decline. Let's do it, I said. I met with Jennifer Wu 2 days later. She was a sharp woman in her 50s who'd valued hundreds of businesses in divorce and litigation contexts. I need you to understand something up front, Jennifer said, after I explained the situation. Business valuation in divorce is often contentious because spouses have incentives to manipulate the numbers. Your husband presented a valuation of $200,000. If he's hiding revenue, the real value could be 10 or 20 times that. That's what I'm afraid of. Here's my approach, Jennifer said. First, I'll analyze all available financial data: tax returns, bank statements, client contracts, accounting records. Second, I'll identify any discrepancies between reported revenue and actual revenue. Third, I'll trace any money flowing to related entities. Fourth, I'll reconstruct what the business financials should look like if all revenue was properly reported. Finally, I'll provide a comprehensive valuation report. How long will this take? Give me 8 weeks. Maybe 10 if the trails are complex. I wrote checks to both Robert and Jennifer using money from a personal savings account. Marcus didn't know about money I'd inherited from my grandmother years ago and kept separate. One critical thing, Robert emphasized as I prepared to leave: don't let your husband know you're investigating. Don't access files in obvious ways. Don't change your behavior. The moment he suspects, he can start covering tracks, deleting evidence, moving money. We need him to feel completely safe. So I played the role of the uncertain ex-wife, considering a reasonable buyout offer, while Robert and Jennifer quietly dismantled Marcus's lies. Robert called me 5 weeks later. We need to meet. I've found something significant, and Jennifer has her preliminary findings. In Robert's office, he and Jennifer had documents spread across 2 conference tables. The sheer volume of evidence was overwhelming. Sarah, Robert began, your husband hasn't just been hiding revenue. He's been operating a sophisticated scheme to siphon money out of DataSync Solutions into shell companies he controls. This is textbook business fraud. He pointed to a flowchart on the wall showing the structure he'd uncovered. Here's how it works. DataSync Solutions, the company you co-nax as the public-facing entity. It has employees, an office, legitimate expenses, but Marcus created 3 additional LLCs: DS Consulting LLC, DataSync Services LLC, and MD Business Solutions LLC. Jennifer jumped in, pointing to financial statements. When DataSync Solutions signs a client contract, Marcus structures it so only part of the revenue flows through the main company. The rest goes to one of these shell LLCs through consulting fees or subcontracting agreements. The shell companies are owned 100% by Marcus through a trust he established. My stomach dropped. So he's been stealing from our company. Not technically stealing in a criminal sense, Robert clarified. He's the CEO and has authority to engage subcontractors, but he's been engaging companies he secretly owns, effectively paying himself twice, once through DataSync Solutions and again through the shell companies. And because you weren't involved in day-to-day business operations, you never knew. Robert pulled up bank statements on his laptop. Look at this. DataSync Solutions shows revenue of $1.8 million last year, which is what you saw in mediation. But when I trace all the money flowing through the related LLCs, the total revenue from clients is actually $5.9 million. $5.9 million. Yes, here's a specific example. Your company signed a contract with Meridian Technologies for enterprise data management services. The contract value was $420,000 annually, but DataSync Solutions only recorded $140,000 in revenue. The other $280,000 was paid to DS Consulting LLC for technical implementation services. Marcus invoiced the client through his shell company for services that DataSync employees actually performed. Jennifer showed me a spreadsheet with dozens of similar examples. This pattern repeats across multiple clients. The client thinks they're paying DataSync Solutions, or they're paying multiple DataSync entities, not realizing they're all ultimately controlled by Marcus. The money gets split between the legitimate company and the shell companies. How much money has he taken through these shell companies? Robert's expression was grim. Over the past 3 years, approximately $4.1 million in revenue that should have gone to DataSync Solutions was diverted to Marcus's shell companies. After expenses those companies claimed, many of which looked questionable, Marcus personally received about $2.8 million. I felt physically sick while I'd been focused on building technology and managing our engineering team. Marcus had been systematically looting the company we'd built together. Here's the really clever part, Jennifer said. The shell companies file their own tax returns. Marcus reports that income personally, so he's not committing tax fraud, but he reports it as income from his separate consulting business, not as income from DataSync Solutions. To the IRS, it looks legitimate. But to you, he's been hiding millions in revenue that should be marital property. Robert pulled out more documents. I've traced the money flows meticulously. Wire transfers from clients to the shell LLCs. Payments from DataSync Solutions to the shell LLCs for fabricated consulting fees. Marcus's personal bank accounts receiving distributions from the shell companies. It's all documented. What about the business valuation he presented in mediation? I asked. The one showing the company is only worth $200,000. Jennifer smiled grimly. That valuation was based on the artificially reduced revenue he reported for DataSync Solutions. If you only look at the main company's books and ignore the shell companies, the business does look like it's declining. But that's fraudulent. Those shell companies are alter egos of DataSync Solutions. They exist solely to perform work under DataSync contracts. Any honest valuation has to include them. She pulled out her own valuation report. When I consolidate all the revenue, remove the fake intercompany charges, and value the business as a whole, DataSync Solutions is worth approximately $3.7 million as an operating business. If we include the $2.8 million Marcus already extracted through the shell companies over 3 years, we're talking about total value of over $6.5 million. My head was spinning. Marcus had offered me $100,000 to walk away from a business worth millions. There's more, Robert said. I found emails between Marcus and Richard, his attorney, discussing the shell company structure. Richard knew about it. In fact, he advised Marcus on how to structure the buyout offer to minimize disclosure obligations. Here's an email from Richard to Marcus from 2 months ago. He showed me the email on his laptop. Marcus, regarding divorce strategy, keep DS Consulting and other entities separate from mediation disclosures. Focus on DataSync Solutions' declining revenue narrative. If Sarah doesn't ask specifically about related entities, you have no obligation to volunteer. The goal is getting her to accept the $100,000 buyout quickly before she digs deeper. Once she signs, the shell companies remain yours free and clear. His lawyer advised him to hide this. I asked, incredulous. Yes, Robert said. Which means when we present this in court, Richard is going to face serious professional consequences. Attorneys have an ethical duty not to make false representations to the court or opposing counsel. This email shows he knew the financial disclosures were incomplete and advised Marcus to conceal material information. Jennifer handed me her formal valuation report, a comprehensive document, nearly 100 pages long. This report details everything: the business structure, the revenue flows, the shell companies, and the true value of the marital business. It's supported by tax returns, bank statements, corporate filings, client contracts, and Marcus's own emails describing the setup. "Sarah," Robert said seriously, "your husband has been committing fraud in the context of this divorce. He presented false financial information in mediation, concealed assets through shell companies, and worked with his attorney to mislead you and the court. This is as clear-cut a case of business fraud in divorce as I've ever seen. What do I do now?" "You tell Amanda immediately. We file a motion to compel full disclosure and request an emergency hearing. We present this evidence to the judge, and we ask the court to value the business properly, award you your equitable share, and sanction Marcus and his attorney for fraud." Amanda's reaction when I showed her the forensic report was a mixture of shock and anger. "This is extraordinary," she said, reading through Robert's findings. "Your husband didn't just hide assets, he created an entire parallel business structure to defraud you. And his attorney helped him do it. What happens now?" "We file an emergency motion. We're asking the court for several things. First, an immediate restraining order preventing Marcus from moving any money out of DataSync Solutions or the shell companies. Second, full forensic accounting of all related entities. Third, a finding that Marcus committed fraud in his financial disclosures. Fourth, a proper business valuation, including all revenue. And fifth, sanctions against both Marcus and Richard for fraud upon the court." Amanda started drafting that night. The motion was filed 2 days later, along with Robert's forensic report and Jennifer's valuation as exhibits. Richard called Amanda within 3 hours, his voice tight with barely controlled anger. "What is this?" he demanded. "Your client is making wild allegations about shell companies based on some forensic analysis that's completely taken out of context. The analysis is based on bank statements, corporate filings, and your client's own emails," Amanda replied calmly, "including emails between you and Marcus discussing how to hide these entities from disclosure." There was a long silence. "We'll respond to the motion, but I'm telling you right now, this is a gross mischaracterization of standard business practices. We'll let the judge decide," Amanda said. "See you in court." The emergency hearing was scheduled for 2 weeks later before Judge Michael Patterson, a no-nonsense business litigation judge, who'd been assigned our case because of the business valuation complexity. The courtroom was formal and serious, with dark wood paneling and the seal of the state hanging behind Judge Patterson's bench. He was a veteran judge in his 60s. Known for his expertise in complex business cases and his intolerance for deception. Marcus sat at the opposing counsel table with Richard, both dressed in expensive suits. Marcus looked confident, his usual polished CEO appearance. If he was worried about the evidence we'd uncovered, he didn't show it. Richard had brought a second attorney, probably anticipating that he might need representation for the ethical violations we'd alleged. Judge Patterson reviewed the motions and exhibits for several minutes before looking up. "This is quite a serious allegation. Mr. Townsend, your client presented a business valuation of $200,000 in mediation. Ms. Reeves, forensic experts are claiming the actual value is closer to $3.7 million, plus another $2.8 million your client allegedly diverted through shell companies. That's a significant discrepancy." Richard stood. "Your Honor, Ms. Chun's so-called experts have fundamentally misunderstood standard business practices. My client operates consulting companies that provide services to various clients, including DataSync Solutions. These are legitimate business entities, properly registered and paying taxes. The fact that some of those services relate to DataSync clients doesn't make them shell companies or constitute fraud. Then why weren't they disclosed in your client's financial statement?" Judge Patterson asked pointedly. "Because they're my client's separate business ventures, Your Honor. The question in mediation was about the value of DataSync Solutions, the marital business. My client's separate consulting ventures are his own separate property." Judge Patterson looked skeptical but turned to Amanda. "Ms. Reeves, what evidence do you have that these consulting companies are not separate businesses?" Amanda stood and nodded to Robert, who was seated behind our table. "Your Honor, with the court's permission, Robert Chen, our forensic accountant, will present his findings. Robert was sworn in and presented his credentials: certified public accountant, certified fraud examiner, 22 years of experience, testified in over 150 business fraud cases. Amanda began her questioning. Mr. Chen, what did your investigation reveal about the relationship between DataSync Solutions and the entities called DS Consulting LLC, DataSync Services LLC, and MD Business Solutions LLC? Robert opened his report. These three entities are not separate businesses. They're shell companies created by Marcus Davidson to divert revenue away from DataSync Solutions, the marital business. They have no employees, no office space, no independent business operations. They exist solely to invoice DataSync clients for work that DataSync employees perform. Can you give the court a specific example? Yes. In March of last year, DataSync Solutions signed a contract with Meridian Technologies for $420,000 in annual services. The contract was negotiated by Marcus Davidson using his DataSync Solutions email and business cards. The services were performed by DataSync employees specifically. Engineers Sarah Chen managed, but the client was invoiced in two parts: $140,000 to DataSync Solutions and $280,000 to DS Consulting LLC. Robert projected an email on the courtroom screen. Here is an email from Marcus to the Meridian Technologists CFO, sent from his m.davidson@datasync.com email address for accounting purposes. We'll split the invoicing between DataSync Solutions and our consulting division, DS Consulting. Both are part of our service structure. The client thought DS Consulting was part of DataSync Solutions, Amanda asked. Correct, but DS Consulting is actually a separate LLC, owned entirely by Marcus through a trust. The $280,000 paid to DS Consulting went into accounts Marcus controls personally, not into the marital business. Amanda approached the bench with documents. Your Honor, I am submitting Exhibits A through R, corporate formation documents showing Marcus as the sole owner of the Shell LLCs, bank statements showing revenue flow, client contracts, email correspondence, and tax returns. All of this demonstrates that these entities are not separate businesses. They are mechanisms for Marcus to steal from the marital business. Judge Patterson reviewed the documents carefully, his expression growing increasingly stern. Richard stood to cross-examine. Mr. Chen, isn't it possible that my client legitimately operates multiple related businesses? Many entrepreneurs have several LLCs for liability protection or different service lines. That would be legitimate if the LLCs provided genuinely separate services, Robert responded. But these don't. Every client contract, every service performed, every employee involved, they're all DataSync resources. The LLCs are just different names on invoices. But the LLCs file tax returns and pay taxes, correct? Yes, but that doesn't make them legitimate separate businesses. It just means Mr. Davidson is sophisticated enough to avoid tax fraud while committing divorce fraud. Richard's face reddened. Your Honor, I object to the characterization of overruled, Judge Patterson said. Continue, Mr. Chen. Amanda resumed her questioning. How much revenue did Marcus divert through these shell companies over the past 3 years? Approximately $4.1 million. That should have been DataSync Solutions revenue was instead routed through the shell companies. After the shell companies paid fabricated expenses, many of which appeared to be personal expenses for Marcus, he personally received about $2.8 million in distributions. And during this same time period, what did DataSync Solutions financials show? Declining revenue and minimal profits. Marcus systematically reduced the reported revenue of the marital business while enriching himself through the shell companies. Amanda nodded and turned to Judge Patterson. Your Honor, we'd also like to call Jennifer Wu, our business valuation expert. Jennifer was sworn in and presented her credentials: certified business appraiser, accredited senior appraiser, 15 years specializing in business valuation for divorce and litigation. Ms. Wu, Amanda began. You reviewed the business valuation Mr. Davidson presented in mediation, which valued DataSync Solutions at $200,000. Do you agree with that valuation? Absolutely not, Jennifer said firmly. That valuation is based on fraudulently reduced financials. When you properly account for all revenue, including the revenue Marcus diverted through shell companies and valued the business as a whole, DataSync Solutions is worth approximately $3.7 million as an operating business. She pulled up a presentation on the courtroom screen, showing side-by-side comparisons. On the left is the financial picture Marcus presented: $1.8 million in revenue, high expenses, minimal profit. How did you arrive at the $3.7 million valuation? I used 3 standard valuation methods: income approach, market approach, and asset approach. All 3 methods, when applied to the complete financial picture, support a value between $3.5 million and $3.9 million. I used the midpoint of $3.7 million as the most reasonable estimate. Judge Patterson leaned forward. Ms. Wu, in your professional opinion, were the shell companies separate businesses or part of DataSync Solutions? In my professional opinion, Your Honor, they're completely integrated with DataSync Solutions. Same clients, same employees, same services, same operations. The only difference is the name on the invoice and where the money goes. Any honest business valuation has to treat them as a single enterprise. Amanda turned to the judge. Your Honor, the evidence is overwhelming. Marcus Davidson created shell companies to hide revenue from the marital business. He presented false financial information in mediation, offering Ms. Chen $100,000 for her share of a business actually worth millions. This is textbook fraud in a divorce context. Richard stood quickly. Your Honor, my client disputes these characterizations. The consulting businesses, Mr. Townsend. Judge Patterson interrupted, his voice sharp. I'm looking at an email here that appears to be from you to your client. He read from the document. The goal is getting her to accept the $100,000 buyout quickly before she digs deeper. Once she signs, the shell companies remain yours free and clear. Did you write this email? The color drained from Richard's face. Your Honor, that email was taken out of context. It seems quite clear, in context to me. You advised your client to conceal material information from his spouse and from this court. Is that your position? Richard's second attorney whispered urgently to him. Your Honor, I'd like to request a brief recess to consult with my attorney about. Denied. Answered the question. Did you advise your client to conceal the existence of these shell companies? Richard's hands visibly shook as he gripped the table. I advised my client that he had no obligation to disclose business entities that we believed were his separate property. Based on what these exhibits show, the entities were created during the marriage, funded by marital business resources, and performed work on marital business contracts. On what legal theory are they separate property? We believed, at the time, that the independent operation of the LLCs, Mr. Townsend. These LLCs have no employees, no office, no independent operations. Your own clients' emails describe them as part of our service structure to clients. You knowingly assisted your client in presenting false financial information to opposing counsel and this court. Judge Patterson turned to Marcus. Mr. Davidson, stand up. Marcus stood slowly, his confident demeanor finally cracking. You presented a sworn financial statement in mediation representing that DataSync Solutions was worth $200,000 and that you had minimal other assets. You were under oath. Were those statements true? Your Honor, I believed at the time that. Were they true? Yes or no? Marcus's voice was barely audible. The valuation. The business has been struggling, Mr. Davidson. I am looking at bank statements showing $4.1 million flowing through companies you own that you never disclosed. I am looking at emails where you describe these companies as part of your DataSync structure to clients while hiding them from your wife. I'm looking at evidence of systematic fraud. Do you really want to stand here and tell me you believed your financial disclosures were accurate? Marcus's hands were trembling now, his polished CEO composure completely gone. I structured my business affairs in a way that I thought was appropriate. You structured your business affairs to hide millions of dollars from your wife in a divorce. That's not appropriate. That's fraud. Judge Patterson set down the documents with a sharp thud. Here's what's going to happen. First, I'm issuing an immediate restraining order freezing all assets in DataSync Solutions, DS Consulting LLC, DataSync Services LLC, and MD Business Solutions LLC. Mr. Davidson, you will not move, transfer, or distribute any money from any of these entities pending final resolution. Marcus looked like he might be sick. Second, I'm ordering a complete forensic accounting of all entities, to be conducted by a court-appointed accountant, at Mr. Davidson's expense. Third, I'm preliminarily finding that the shell companies are marital property, subject to equitable distribution. Judge Patterson turned his attention to Richard. Mr. Townsend, I'm referring your conduct in this matter to the State Bar for disciplinary review. You knowingly assisted your client in concealing assets and making false representations to opposing counsel and this court. That's a violation of your ethical obligations as an attorney. Richard's face had gone ashen. Fourth, the judge continued, I'm sanctioning Mr. Davidson $50,000 payable to Ms. Chen for costs associated with uncovering this fraud, including the fees paid to the forensic accountant and business valuation expert. Fifth, I'm sanctioning Mr. Townsend personally $25,000 for his role in this deception. Judge Patterson looked directly at Marcus. Mr. Davidson, I've been presiding over business and divorce cases for 23 years. This is one of the most egregious examples of financial fraud I've encountered. You created fake companies, hid millions of dollars, presented false financial statements under oath, and worked with your attorney to deceive your wife and this court. Your conduct is reprehensible. Your Honor, I can explain, Marcus started. You'll have an opportunity to present evidence at the final hearing. But based on what I've seen today, I'm inclined to award Ms. Chen substantially more than 50% of the marital estate as a sanction for your fraud. We'll reconvene in 45 days for a full hearing on asset division. He banged his gavel. This court is adjourned. In the hallway outside the courtroom, Marcus looked devastated. Richard was on his phone, presumably already calling his own attorney about the bar referral. I saw them having an intense, whispered argument before Marcus stormed off alone. Amanda put a hand on my shoulder. That was about as decisive a victory as I've ever seen in a divorce case. Judge Patterson is furious. The sanctions, the bar referral, the asset freeze. Marcus is in serious trouble. What happens now? They'll make a settlement offer. A real one this time. And if they don't, we go to trial. And based on today, I think Judge Patterson will award you 60 to 70% of everything as punishment for the fraud. That could be $4 million or more. 5 days later, Richard, through a different attorney, now representing him personally, sent a settlement proposal. Marcus would pay me $2.1 million for my share of the business, representing approximately 57% of the combined value of DataSync Solutions and the shell companies. He would also pay all my legal fees, including Robert's $28,000 forensic accounting bill and Jennifer's $22,000 valuation fee. With Amanda's advice, I countered $2.3 million plus all fees, representing about 60% of the total value. Given the fraud, I wanted more than half. They accepted within 2 days. The final hearing was mostly procedural. Judge Patterson reviewed the settlement terms, confirmed I understood and agreed, and made a point of addressing Marcus directly. Mr. Davidson, you attempted to defraud your wife of millions of dollars. The only reason you're not facing criminal charges is because you've agreed to this settlement and made full disclosure. But understand this, I've referred your conduct to the district attorney's office for review. If there's evidence of tax fraud or other criminal activity in how you operated these shell companies, you may still face prosecution. Marcus, subdued and quiet, nodded. I understand, Your Honor. And Mr. Townsend, Judge Patterson said, turning to Richard, who was present for the hearing, the BOF Disciplinary Board will be reviewing your conduct. I expect they'll take serious action. Officers of this court have an obligation to honesty and integrity. You violated that obligation. Richard said nothing. The judge signed the order. The divorce was final. The settlement took 2 months to fully process. Marcus had to liquidate some of the shell company assets to come up with the $2.3 million. When the final wire transfer hit my account, $2,348,000, after all fees were deducted, I felt a strange mixture of vindication and sadness. The business we'd built together was essentially destroyed. Marcus kept control of DataSync Solutions and the shell companies, but the legal fees, settlement payment, and reputational damage from the court proceedings devastated the operation. Within 6 months, I heard he'd sold what remained to a competitor for less than $1 million. Richard Townsend was suspended from practicing law for 2 years by the state bar. The bar found he'd violated ethical rules regarding candor to the tribunal and misrepresentation. His career never fully recovered. As for Marcus, the district attorney did review his shell company structure for potential tax fraud. While the DA ultimately didn't file criminal charges, the IRS launched an audit that reportedly cost Marcus an additional $180,000 in back taxes and penalties. I used part of my settlement to start a new company, a consulting firm helping businesses with database architecture and data management. I hired some of the engineers who'd worked for DataSync and who'd grown frustrated with Marcus's deceptive management style. Within a year, we were profitable. I thought about that mediation session often. Marcus casually tossing out the $200,000 valuation, sighing about how terrible business had been. His lawyer pushing papers toward me, confident I'd take the $100,000 and disappear. The performance of the struggling entrepreneur, carefully rehearsed. If I hadn't had administrative access to the email system, if I hadn't found those mysterious accounts, if I hadn't hired Robert and Jennifer, I would have accepted that offer. I would have walked away with $100,000, while Marcus kept millions hidden in shell companies. Instead, I walked away with $2.3 million, and the satisfaction of watching his confident performance crumble when Judge Patterson confronted him with his own emails, his own bank statements, his own lies documented in his own words. The money mattered, of course. It gave me the freedom to start fresh, to build something new on my own terms. But what mattered more was the principle. Marcus had looked me in the eye for years, sharing a business and a life, while systematically stealing millions of dollars from our company. He'd created an elaborate scheme, worked with his attorney to hide it, and counted on my ignorance to let him get away with it. The system worked. The forensic accountant traced the money. The business valuation expert exposed the fraud. The judge saw through the deception. The evidence was irrefutable bank statements, corporate filings, emails, tax returns, all of it in Marcus's own handwriting, bearing his own signatures. Justice isn't about revenge. It's about the truth coming to light, documented in bank records and email trails, forcing people to face the consequences of their own carefully constructed lies. And sometimes, when you ask for time to think about an offer, what you're really thinking is, I already know what you're hiding. And soon, the judge will too.